The bank that cleaned dirty money, HSBC's money laundering scandal. In a world where trust in financial institutions is paramount, one bank's dealings threaten to upend the very foundations of our economic system. Sounds dramatic, doesn't it? Well, that's because it is. If I told you that a bank you trusted was secretly helping the bad guys, would you still put your money there? Flashback to 1865. HSBC wasn't always the massive, skyscraper-owning behemoth we see today. No, it had humble beginnings, starting as a local bank in Hong Kong that facilitated trade between Europe and Asia. This humble bank went on to become HSBC, which for the acronym enthusiasts stands for Hong Kong and Shanghai Banking Corporation. Over the decades, HSBC became a synonym for global banking prowess, weaving its way into 67 countries and territories. For many, it represented stability and prosperity. The iconic lion logo wasn't just a mascot, it was a symbol of financial security for millions. As the bank expanded its horizons, the world embraced globalization. Money flowed like water, crossing borders with the ease of a swipe or click. HSBC was the maestro, directing the flow, ensuring everything was harmonious. The secret sauce? Well, it wasn't just their delectable afternoon teas. They emphasized global connectivity, understanding local markets with the precision of a Swiss watch, and capitalizing on opportunities faster than one can say. Economic expansion. By the time the 2010s rolled in, murmurs started emanating from the dark corners of the finance world. While most of us were still reeling from the 2008 financial crisis and nursing our trust issues from the betrayal of those big fancy banks, HSBC was quietly brushing some dirt under the carpet. And by dirt, I mean allegations of being a conduit for drug money and other, shall we say, less than legitimate funds. Meanwhile, as your local credit union was grappling with online banking, HSBC was busy being the globe's 6th largest bank by total assets in 2011. A cool $2.556 trillion. Kudos to them, right? Now, sometimes trust is paramount. Well, turns out, for some, so was profiting off the underbelly of society. The great HSBC, with its sprawling branches and deep-rooted legacy, was now on the cusp of being exposed. The lion, it seemed, had been feasting on some unsavory prey. The first whispers of suspicion arose not from within the labyrinthine corridors of HSBC, but from the vigilant eye of the U.S. Senate's Permanent Subcommittee on Investigations. Their delightful 2012 report, every bit as riveting as a page-turner thriller, uncovered some curious practices at HSBC's subsidiaries. HSBC Mexico, for instance, had shipped a staggering $7 billion in cash to HSBC USA. Just to clarify, we're not talking about a tourist forgetting to convert their pesos before a trip. In the words of one U.S. law enforcement agent, only drug dealers could have so much cash, obviously. Then, there was HSBC's involvement with Iran, while the U.S. had imposed sanctions on Iran. HSBC, however, seemed to have a selective amnesia about this particular detail. Between 2001 and 2007, they gleefully processed 25,000 transactions linked to Iran, totaling $19.4 billion. And the cherry on this proverbial sundae, they cheekily removed any reference to Iran in their records. It's like trying to hide an elephant in a room by simply renaming it, not elephant. But wait, there's more. HSBC's close understanding of local markets turns out they were also pretty chummy with some questionable characters in countries with, let's just say, complex human rights records. Providing banking to some organizations in Saudi Arabia and Bangladesh raised a few eyebrows, especially when ties to potential terrorism funding emerged. Internationally, regulatory bodies launched investigations, emails, internal memos, and the reactions of HSBC's top brass made for a mosaic of denial, realization, and panic. In the cold, somber meeting rooms of legal chambers, the weight of the legal consequences for HSBC was being tallied. The U.S. Department of Justice, or DOJ, wasn't in a forgiving mood. And why would they be? Here was a bank, the sixth largest in the world, caught red-handed in facilitating money laundering for drug cartels. By December 2012, the verdict, or rather, the settlement, was in. HSBC was to pay a record-breaking $1.9 billion to U.S. authorities. In the banking world, it was the largest penalty ever slapped on a bank. However, despite the evidence in the mammoth fine, HSBC managed to sidestep criminal prosecution. Instead, they were handed a deferred prosecution agreement, which is the legal equivalent of being told, "You've been very naughty, but we won't send you to jail if you promise to be good." Many questioned whether the bank was simply too big to jail. The atmosphere at HSBC was nothing short of a tempest. Senior management heads rolled. Changes were made. The bank's mantra shifted overnight. Systems were overhauled. Compliance measures were tightened. And the bank promised such lapses never occurred again. By the end of 2013, HSBC's share price had rebounded, proving that in the world of finance, memory is often short and money talks the loudest. The banking community wasn't immune. The scandal was a cold splash of water, waking up institutions globally. Compliance departments suddenly became the hottest ticket in town, with every transaction scrutinized with an intensity usually reserved for picking the right Instagram filter. Change isn't just about throwing money at a problem. It's about introspection and cultural transformation. And this is where HSBC's journey got a bit philosophical. They embarked on an organizational overhaul, redefining their values and mission. Their CEO at the time, Stuart Gulliver, outlined a strategy to reshape HSBC and focus on its core businesses. The bank went on to shed tens of thousands of jobs and sold off assets to simplify its structure. HSBC had to come to terms with its egregious errors, not just in the boardrooms, but publicly. Acknowledging their mistakes became part of their redemption narrative. The lessons from the scandal were clear and resonated far beyond HSBC's polished corridors. The entire banking industry took note, realizing that unchecked ambition, combined with lax oversight, was a recipe for disaster. In the wake of the scandal, HSBC made sweeping changes. The bank announced it would spend around $700 million on tightening its compliance. As for HSBC's future, the bank continued its operation, albeit with a stain on its legacy. In subsequent years, their annual reports made sure to highlight their commitment to ethical practices and improved oversight. But the scandal's shadow loomed large, a constant reminder that redemption in the banking world isn't measured in apologies, but in tangible reform. For the wider banking sector, the HSBC scandal became a case study, a lesson in what not to do. Compliance departments across the globe probably had "Remember HSBC" posters on their walls, reminding them of the steep price of negligence. In the grand tapestry of financial misdeeds, HSBC's scandal was but a thread. But what a glaring, neon-colored thread it was, forever altering the pattern of trust and skepticism between the public and the world of banking.